Hey everyone, Brian Armstrong here. I'm back in DC, and even though the government is shut down, the Senate is working hard on getting market structure legislation passed for crypto, which is great to see. I attended some meetings this morning with both the Senate Dems, the Senate Republicans, and I'd say they're 90% on the same page. There's draft text being shared back and forth between both parties. Both sides want to get this done. That last 10%, there's a couple remaining issues open, like, for instance, DeFi. We want to make sure that we're pushing to protect DeFi and all the innovation potential that can have, and that the centralized intermediaries in crypto like Coinbase should be regulated, not the protocols. And then, of course, we're making sure to preserve stablecoin rewards for you as well. The big banks are coming for their cash grab, trying to block that, even though it was just recently decided in the Genius Act, which just recently became law. We're not going to let them relitigate that. So with these last few issues getting wrapped up, we're hoping to see this bill come out of committee by Thanksgiving. That would be a great outcome. Fingers crossed. We're going to keep showing up for your rights, and we'll keep you updated. Thanks.
Hey, what's going up, Bull Runners? Welcome back to the channel. Ryan Huggins here, aka Win with Ryan. Imagine a world where the United States national debt just hit $38 trillion, and the race for financial dominance is shifting from weapons to Bitcoin. What if this could be the turning point we've all been waiting for? Well, stick around because today's crypto news might just change everything you thought you knew about money, power, and the future. We'll head over to X to find out all the breaking news that's happening in the crypto world today. We'll head over to Forex Factory and find out all the red folder news you need to know about tomorrow. And at the end of the video, we'll be heading over to TradingView to take a look at the charts, looking for important levels for resistance and support that you need to know about right now. Plus, we're going to be looking at our long-term and short-term momentum waves, and so much more in today's video. So if you're like most people where you don't have the opportunity to spend hours a day doing crypto research, well, that is what we do for you on this channel every single day. So make sure you subscribe right away. And if you are still feeling bullish about this current bull run, let us know by commenting 777 down below.
We just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University. Just go through the link in the description below. Get in right now.
First things first, we're heading over to CoinMarketCap. Check out the overall health of the crypto market today. We are up 2.38% on the total market cap, which is now at $3.71 trillion. There has been $155 billion worth of trading volume in the last 24 hours. Fear and Greed Index is finally starting to tick back to the upside. We're at 32 out of 100. When will we be back in the neutral zone? Altcoin Season Index unfortunately continues to fall out, 23 out of 100. We are back to full-on Bitcoin season. And that's because Bitcoin dominance continues to grow, now significantly above the 59 at 59.3%. That's a rally from our recent lows. It was all the way down to 57.4%. Bitcoin ETF indecision continues as well. Bitcoin $112 million worth of outflows today, bringing the total for the week of inflows to $324 million. Ethereum also experiencing back and forth here, minus $18 million for the day, and a total for the week of minus $18.9 million. Top 6 cryptos by total market cap. Number 1 is Bitcoin, coming in at $2.2 trillion. Ethereum, number 2 at $38.69, $466 billion market cap. Tether coming in at number 3 at $182 billion market cap. Binance now at number 4 at $1,137 and $158 billion market cap. XRP number 4 at $2.39. It could easily catch up and surpass BNB again shortly. Currently sitting at $143 billion market cap, $2.39. Solana at $192. Dropping significantly, now down to $105 billion. Red folder news you need to know about this week: core CPI month over month and year over year was supposed to be coming out tomorrow morning, but U.S. government data may be impacted for the shutdown. Now this week, this is significant news, but nothing compared to what is coming out next week. Will the federal government finally be opening up? We have the federal funds rate announcement. Now, the great thing is this is by the Federal Reserve, which is actually not a government issue, a government program regardless. So they're still going to do what they are supposed to do here. But also on Thursday, we're supposed to get our GDP numbers quarter over quarter. But the biggest thing coming out next week is the fact that we are going to be going from 4.25 federal funds rate down to 4%. That is what is forecasted right now. Could we get an even more significant drop, or could they do an alley-oop uno reverso and go back to 4.25 because of the way the economy is performing? Personally, I definitely see it coming to a 4.0. I would prefer it to come down to a 3.5. As a lot of you know, I'm also in the real estate industry, fix and flips, and the interest rates on that money is extremely expensive. As we saw in the intro of today's video, DC may be shut down, but momentum for market structure clarity is at an all-time high. Brian Armstrong has been really fighting for this, honestly. I mean, this is the guy, as far as who's fighting for crypto the hardest, by far, on its face, is Brian Armstrong. Now, is it all legitimate, or is it part of the show like most of the government stuff is? Time will tell, but we definitely want to see this bill passed for crypto's side of things, not the banks. And the real issue is right now, the Democrats are fighting back against the originally written law that was about to be passed, because the banks came out and started crying because of the fact that the banks do not want crypto companies to be able to pay out yield, because then banks literally become non-essential when it comes to money transfers, money holding, etc. Because now you could literally just take all of your money and hold it in Coinbase or other centralized exchanges, for those of you guys that feel more comfortable in that, and earn interest off of your money sitting there rather than it sitting in Bank of America or Wells Fargo or Chase Bank. And as we know, Brian Armstrong is on the fight for that, but so is Senator Loomis. She's the one that's actually spearheading this from the inside the government side of things. She's also really excited about what could potentially happening once Bitcoin gets the okay. And instead of having an arms race with weapons between China, Russia, and the United States, it becomes an arms race against Bitcoin.
Wouldn't it be fun if the next arms race was not for weapons, it was for Bitcoin? Wouldn't it be fun if the US is buying Bitcoin and it scares China and Russia so they start buying Bitcoin, and we have an arms race over Bitcoin instead of over weapons? That we're as globally, we're challenging each other to have a secure store of value.
But wouldn't it be more fun if you and me and your mom and your dad and your aunts and your uncles all got Bitcoin first before all of the countries start? This is an opportunity to front run crypto. I mean, we've been saying this for years. You're early. If you're paying attention to this already, you're a genius. Make sure you smash that thumbs up, because you are a genius. But literally, you are a genius. You are in crypto, the scariest potential future changing financial opportunity of our lifetime, and you were smart enough to see it as an opportunity. Most people still don't see that. You have to actually convince people that they should have at least a 2%, 5% exposure to their portfolio of crypto. Now, obviously, it's not financial advice. Do not buy or sell anything, as we talk about on this channel. But you're a genius and you already know all this. So we know the crypto golden age is coming, and Treasury Secretary Scott Bessent is continuing to push Trump's agenda ahead of America's golden age. And as they say here, America's golden age is underway, and the best is yet to come. And I think that it better be yet to come, because right now, yeah, there's some things that are going okay. But when it comes to finances, I talk to my family and I talk to my friends, and all of them are feeling the pinch. Unless you are severely or excessively loaded and you got tons of money, which never affects you. But right now, like my family members that are out there that are working those 9-to-5s, that are living paycheck to paycheck, are feeling the extra squeeze right now. So America's golden age better come here quickly, because we do have the 2026 midterms coming. Now, he says inflation is down, energy prices is down, and real wages are up.
The economy looks pretty good. Could be growing as much as 4%. I'm looking at some deflation, energy deflation, gasoline deflation, agriculture, commodity deflation. That budget deficits seem to be coming down. Even spending may be coming down. I mean, I know you're tweeting on this stuff. Things look pretty good at home, huh?
Larry, things look great, and they're good now. I think 2026, 2027 are going to be great years because, as you know, part of what's happening with the tax bill is the president's campaign promises, which he kept, on no tax on tips, no tax on overtime, no tax on Social Security, and deductibility of auto loans for American cars. On the first three, working Americans have kept their withholding the same. And you might recall, I'm also the IRS commissioner, so I can see what's going on at the IRS. And I can tell you that in the first quarter of the year, we are going to see substantial tax refunds for working Americans. On January 1st, working Americans will reset their withholding levels, and they will have substantial real income increases. So that's a pretty good combination. You get a refund and your weekly, monthly earnings go up. And as you said, we're starting to see this affordability crisis. We've gotten it under control. The first thing to getting it under control was stopping the Biden inflation. Now that we've done that, we are able to, as you pointed out, energy prices are down. I think that housing prices are a lagging indicator, especially in rates. So I think we could see that the CPI numbers start coming down next month, the month after.
So he does say at the end there, consumer price index, he sees that is going to start coming down, which is the CPI, which is the number that is supposed to be coming out tomorrow, or while you're watching this, possibly today. But we are not going to get these numbers because, unfortunately, the government shut down. However, once they open back up, we will start getting those numbers again. But they have been coming down over time. But most people are not feeling it in their grocery bags just yet. One of the most interesting things I saw on X, Twitter, in the entire week was this post right here from Shanaka. Now, it is in response to the fact that we do currently have over $7 trillion worth of liquidity sitting in money market funds. So these people are putting their retirement, their liquidity into money markets because it's earning actual high interest rates. Well, what changes that? Well, the federal funds rate becoming lower. So take a listen to this. We're going to go through this. This is a phenomenal report here. He calls it America's hidden liquidity bomb that's about to obliterate every market assumption. So $7.4 trillion is parked in money markets, not stocks, not in real estate, not in gold, not in Bitcoin. It's idle treasury bills earning 5%. And it's also liquid money. They can withdraw it from money markets, waiting for a single Federal Reserve decision to unleash the largest capital reallocation event in human history. This isn't cautious investing. This is civilizational coiled spring with central bank trigger. Donald Trump continues to take on Jerome Powell and talk trash about him. And this is the reason why. The detonation physics here. When the Federal Reserve will cut rates by 150 to 200 basis points, or 1.5% to 2%, money market funds income is going to collapse by 100 to 140 billion annually. That lost yield must hunt returns somewhere else. So what does that mean? Well, these people right now are holding all of their money in money market accounts because they're earning great yield. But when the federal funds rate comes down to a point where they're not earning any interest that's worth holding it in that spot, they have to reallocate that money. And as he puts it, that lost yield must hunt returns somewhere. Each 1% money market allocation releases is $74 billion worth of liquidity. 10% rotation unleashes $740 billion. And then 20% exodus deploys, how about this, $1.48 trillion into risk on asset. That would be your stocks, gold, silver, crypto, of course, as we're waiting for Bitcoin, XRP, Ethereum, that all coming in $1.48 trillion flooding into those markets. And those flows don't trickle. They cascade through institutional pipes like a breaking dam. Now, there are a little bit of fears behind this because the historical pattern nobody remembers is that in 1998, when 1.3 trillion was released, tech bubble ignited. In 2003, 2.1 trillion was released. Housing mania began. In 2009, 3.8 trillion was released. everything rallied 300%. And in 2025, 7.4 trillion is about to be released, and there's unknown territory. It's never happened at that level. And we do know the Federal Reserve is already signaling rate cuts. And we do know next week we're already going to be coming down an additional 25 basis points or 0.25%. The four horsemen triggers, what to watch for here, ladies and gentlemen. The 3-month T-bill dropping below 4% returns from 4.8. Federal Reserve confirming sequential cuts beyond one and done. So that we'll know next week. High yield spreads compressing below 350 basis points, and crypto ETF inflows sustain above $2 billion weekly. All four of these converging equals the detonation sequence. So let's talk about the Bitcoin mathematics here. Money market fund, 7.4 trillion at 5% yields. Bitcoin supply, 21 million fixed. 96% is already mined. BlackRock's IBIT has $100 billion already assets under management, and they did that in just 10 months. Remember, they just released this at the beginning of the year. If 5% rotates, 370 billion, Bitcoin price 280 to 350K. If 10% rotates, that would be 740 billion into Bitcoin. Then you're going to get 550 to $700,000 Bitcoin. If 15% with sovereign buying, meaning like we just talked about, China, Russia, United States getting an arms race to buy crypto along with the release of these money market funds, you're talking about $1 million per Bitcoin. No speculation. He's talking, this is thermodynamics. Finite supply meets infinite liquidity in mathematical collision. So what's the mechanism behind this? Well, money market account flows through institutional architecture, prime brokerages rebalancing, pension allocation triggers hitting, corporate treasury deployments, sovereign wealth hunting, uncorrelated returns, and ETFs absorbing without selling pressure. And for all of you guys that are XRP fanatics, what does that mean when prime brokerage is rebalanced? Where does all of this money flow through? Traditionally, right now, it's through the slow pipes. But once this breaks and the dam starts flooding, all of the pieces are in place for Ripple to their technology to be used and XRP to be flowing this liquidity. In this argument, they're saying every pipe terminates at scarcity. Only one asset is provably finite, instantly settable, and global accessible 24/7. That's Bitcoin. So what is the Federal Reserve's choice? Well, one, they can keep rates high and all of a sudden the United States goes into recession and we have a debt spiral. Or they can cut aggressively and boom, we get that $7.4 trillion liquidity tsunami. The bond market's price will be 150 to 200 basis points cuts through 2026. The choice is made. The spring releases. So let's talk about the countdown for this happening. When 3-month yields crater from 5% to 3%, capital doesn't deliberate. It hunts yield with systemic urgency. Gold supply, it's uncertain. We don't know how much gold is out there. Same thing with silver. Real estate is illiquid. It is tough, right? A lot of times the reason we are very aggressive on the buy side when we're going to flip a house, we're going to find something at an extremely good deal on the front end, because we don't know how long it's going to take to sell on the back end. No matter how beautiful you make a house, it is at the mercy of the market. It's illiquid. You can't just sell it instantly. Stocks are expensive. Bonds are debasing. Bitcoin, mathematically provable, 21 million cap with instant global settlement. The largest dry powder pile in history aims at civilization's scarcest asset. The trigger is Fed policy in motion. The timing is bond market priced, and the outcome is thermodynamic. Inevitability. When the spring releases, price discovery enters unknown physics. So choose accordingly, ladies and gentlemen. And we do have an information release. U.S. Federal Reserve will print $1.5 trillion following October and November interest rates cut. And what are we in right now? We're in October. We do know the interest rates coming. Guess what? We also have November coming in the future. Interest rates coming. Correlation with the previous post. And also, as we know, the United States debt just reached its all-time high. We're now at $38 trillion worth of debt. And this is a clear sign that the traditional financial systems are under immense pressure. This could push governments and investors to look at alternatives like Bitcoin. which some see as the hedge against inflation and economic instability. So understanding this trend is crucial because it might influence how countries and individuals approach their finances in these coming years. And as I mentioned, with the government shutdown breaking, Federal Reserve officials who are unable to receive U.S. economic statistics due to the continuing government shutdown, they also recently lost access to a separate measure of employment data from ADP, a payroll processing firm whose data sharing with central bank has been public for years. All right, so let's head over to XRP in the charts. We're going to start blank and redraw everything here, get cleared up. So first and foremost, we're looking at XRP. We're going to the weekly charts, and we're going to be looking for candle body closes, which are the most important thing. So a couple of things. Right now, candle body closes have happened above our 50-week exponential moving average. Our weekly long-term momentum, even though it is pointing downward, it's on a downward decline here for long-term momentum. It's still rocking green, so we are still bullish. Short-term momentum, remember this we talked about a couple of weeks ago. It was all the way up here, and we said that it needed to recycle itself down to zero. Well, it has now officially reached the zero level on the short-term momentum wave, so it can now make its way to the upside. In fact, last time we reset to zero and it made its push, it would start right here. We were at $2.19, made a new all-time high at $3.60. Now, we did have a pump fake, so let's not forget this. So price came down, reset to zero, sat there for several weeks, started to make a move to the upside, pump faked us, and then double bottomed before making the actual move to the new all-time high. And if we go ahead and take a look at our most recent candle body closes here, we're going to have this as our ultimate high. This is our highest candle body close there. We're going to make these white actually because there are going to be resistance here. Then we're going to have this candle body close right here before the extreme dump to the downside that we have to get back to. We also have this candle body close right here that we're going to run into as resistance as well. So we were talking about this once this massive pump happened. We were talking about this being a possibility where price came back down and filled in this fair value gap on the weekly chart. Now, we definitely did not anticipate price dripping all the way down here on this crazy liquidation level. What is crazy though, when you think about it, now if we go here and mark this off and we'll change these to red, the fact that this was the previous low and it barely wicked below that, just came and swiped up all of that liquidity there and then drove back to the upside, which was an absolute manipulation of the market. However, there was liquidity sitting below there and it did come and get it. Now, a couple of things to think about here. We do have a fair value gap. If price continued to drop, that fair value gap would fill at 60 cents to the downside. So it is really exciting when you see high velocity candles to the upside, but typically they will come and be filled over time. So maybe this gets filled during the next bear market, which I would hope that we get to at least wait until then. However, we may be entering the bear market, some people say. Now, I'm still optimistic. We are still bullish long-term momentum here. We have reset down to zero short-term momentum. This is on these higher time frames of weekly candles. Now that we have 2 days and 23 hours left in this current weekly candle, this is the candle body close we're in. We have a green candle for this week. So this is going to be our new level of support here, which actually is $2.39 and 147. Right now we're sitting at $2.39 and 646. So not looking super exciting as far as the weekly candles go. Let's go ahead and flash over to the daily candles and see what we can come to here. As we can see, our most recent closed body candles to the downside, which will be our next level. This is going to be daily support level here. So right now we have a support at $2.39, which is exactly where we're at. And our next level of support here is at $2.29. So a 10-cent move to the downside. Now, what we see here, long-term momentum still bearish, unfortunately. So we need to see a continued move to the upside. We do have short-term momentum has returned itself to the top side. So it has recycled from 0 to 100. Unfortunately, price action was not very strong during that move. So a couple of things need to happen. One, price needs to continue moving to the upside. And we do actually need to break above the 10 exponential moving average, which we can see here on the daily charts. And that would get us back to $2.45. Let's go ahead now and switch to Heikin-Ashi candles and find supply and demand zones outside of just your typical support and resistance. So the current move that will come into play right now is going to be this move, like I said, from when we did go down these levels to a new all-time high. And we're going to take this level right here, and we're going to find the last red candle before the up move. So this is going to be our ultimate level of support now, and we're looking for bodies of candles. If we drop a body below this, we're in severe trouble. That's $2.20 to the downside. On the opposite end, so we have our support level. The opposite end of this is going to be our resistance level, which is the final green candle before the drop. So this is support and resistance right now as far as supply and demand zones go. Then we'll move into our most recent drop, which did incorporate that wick as well. And what we're going to look for is the last green candle before the drop to the downside. This is on the daily charts. So we're going to be able to incorporate that as a resistance to the upside at $2.94. And then we also want to find our last red candle before the green up move. And that's going to be this red candle right here. And that gives us a nice supply and demand support zone here. Gives us a little more hope than what we saw before. And this box is coming into play with us at $2.39 to $2.29. So we already knew that. And those are actually candle body close important levels on the daily charts we talked about earlier. So we need to maintain above this. Like, this is extremely important, and we maintain that and then start to make our move to the upside. When we switch back to traditional candles outside of Heikin-Ashi, we do have a fair value gap to the upside, and it did get penetrated into. However, it did not fill it. So this candle on October 13th started making its move up, dipped in, because the fair value actually was this whole entire candle. So the 11th, 12th, and 13th move to the upside was closing that fair value gap, but did not fully close. It will be fully closed when we get back to this weekly candle body close of $2.77. We have another fair value gap up here in this zone here at $2.94. We have another one here at $3.20. And we even have one all the way back up here at our supply and demand zone resistance level of $3.42. So finishing this week is extremely important that we start to get some bullish momentum to the upside, because right now everything is starting to look bearish. I also do not like the fact that our short-term momentum wave has actually reached its peak at the top of the 100 level here. It may have 1 or 2 more days worth of movement to the upside before it needs to reset and cycle back down to 0. So make sure you follow along, subscribe today, and I'll be continuing to cover these charts for us as far as Bitcoin, Ethereum, XRP goes. When we take a look at Bitcoin's charts in the daily, we got the same scenarios going. Now, there are a lot more supply and demand zones here. What we're looking at is we're running into a resistance. It needs to break above 111,000. And then surge through. Our next level is 114,000. Then we have 116,000. Long-term momentum wave for Bitcoin also bearish, but it is starting to make its turn to the upside. Short-term momentum definitely has more room to run here, more than XRP did in its short-term momentum wave. And Ethereum's short-term momentum wave has a ton of room. So if it continues its momentum to the upside, Ethereum's resistance level coming in at 4,634 Short-term or long-term momentum wave, though, is still running bearish, unfortunately. And you can take a look at this indicator, by the way. It's called the Wolf Pack. I use the 10 and the 30. So fast length 10, slow length 30. But look at what happened. So price was green, bullish, came back, checked under here, turned red. So we're bearish. And then once it broke above, we went bullish again. And look at this. It rode bullish momentum for a very long time until it broke back down below September 24th. Then it did a dip and it tried to rip back to the upside, rejected. Ethereum trying to make that break above $5,000, but just that psychological level, people continue to take profits at these levels.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt, so this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today, and it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.